Hey there, let's talk about condos. I know I've done a video previously of how to look up if a condo is accepted with an FHA or VA loan, but let's talk this time on what makes a condo non-warrantable. So a non-warrantable condo has nothing to do with warranties. It's whether or not that condo meets Fannie Mae or Freddie Mac guidelines for a conventional loan. And there's a couple of reasons that a condo can be considered non-warrantable and couldn't do a normal transaction. So the first things that can make condos non-warrantable are their ownership and investor percentages. So if a condo complex has more than 50% that are currently being used as non-owner occupied, it could make them non-warrantable, especially if someone is purchasing it as a secondary home or investment property. If it's their primary residence, that's not always a hard stop. However, the second piece of that is if over 20% of the complex is owned by a single entity, that immediately puts you into non-warrantable world, and it can be extremely difficult to even find an investor who's willing to take that on. The second issue that oftentimes can make a condo non-warrantable would be insurance or HOA related. So if there is not appropriate insurance coverage on a condo complex and something were to happen, then the condo could go into disarray because the insurance can't replace the items that need to be fixed. The second thing that can happen is if there are not enough HOA reserves. So within the budget they create for the HOA dues, if they don't have enough in reserves, and again, something happens to the complex, they need to turn it into insurance, they may not even have enough to pay their deductible that they have to pay. And then the third thing is if there are delinquent HOA dues. If there's a large number of units within a complex that are behind on their HOA dues, it could make it non-warrantable. So why do these things necessarily matter? Why is non-warrantable such a big deal? Well, the problem becomes, let's say you have a high number of investors owning the majority of a complex. If one of them, something happens to them physically and they can no longer pay the mortgage, or they dissolve their business and there are mortgages out on these properties, they could technically all foreclose at the same time, which could drop the property values of all the surrounding complexes, and the lender who's holding those loans now has someone that owes more than a property is worth, and it makes it really difficult to offload it. And as I mentioned previously, if there are HOA issues with not enough dues, not enough reserves, or not enough insurance, and in this wonderful hurricane-prone area that we have, a hurricane comes through, damages the complex, they're responsible for the outside of the complex because your insurance as the owner typically covers the inside only, and they don't have enough reserves, they can't turn it into insurance and pay their deductible, or they can't make the changes that are needed to get the complex back up to code, which could then force the owners to have to foreclose on the property or short sale, or the investors could abandon the properties. So are non-warrantable condos always a no-go? No, not necessarily. One thing that fixes all problems, as you would have guessed, is cash. If someone puts in a cash offer, none of those items are collected or checked into. It really doesn't matter. There are non-warrantable loan options, though. We have quite a few investors that offer non-warrantable condo loans. They're non-QM, meaning they're not conventional FHA or VA, and they will require typically a larger down payment, and they will typically have higher interest rates because that condo complex is a higher risk for the buyer and for the bank. If you're a seller's agent and you're trying to mitigate some of these issues ahead of time, you can ask the HOA directly for this documentation. It's the same documentation we have to ask them during the lending process, which is asking them what percentage of the complex is non-owner occupied and how many owners own each of those. That will at least help give you a clue as to whether or not that property may need to be a cash-only offer. And then if you use me as your lender, you can always get some of that information and ask me, and I'll review it with you. If you have any questions though about condos, how to know, what to know, just feel free to reach out.